Madhusudan Kela, market veteran and founder of MK Ventures, joining us on the show right now. Mr. Kela, thank you so much for your time to us here on NDTV Profit. Let me begin and ask your view of what you're making of all of this trade war, tariff war to start off with.
So, Tamanna, trade wars, good morning and thank you for having me. Trade wars are never good for generally global markets, and it definitely squeezes the overall supply chain and the smoothness with which the markets function. But it is a reality that it is here and it is knocking at our doors. I would say there will be somewhere if India manages to escape this, which is what the base assumption today is, then it could actually be interesting for a lot of Indian businesses and Indian companies. So because the overall supply chain, let us say supposing you are importing something from Canada and you have put 25% tariff on Canadian, Mexican goods. Some of that may get replaced from exports from India, and if you don't have that kind of tariff, to the extent we will stand to benefit. So what we'll have to watch carefully that whether India can manage, and again I repeat, that looks like the base case, if India can manage to have a relationship with the US which will not impact our tariff and make a possible good deal which is win-win minus the tariff imposed, then it could actually be an interesting good outcome for a lot of Indian companies.
Some hints of that from the budget as well, isn't it, Mr. Kela, where India has reduced custom duties on certain products, including bikes, Harley Davidson. It's like a peace offering in advance before we get to the negotiating table. Do you think that was one important highlight in the context of tariffs and the other big takeaways you've seen from the budget?
I think given the relationship of US and India, and also a personal equation between Mr. Trump and Modi ji in India, I would say that India will do a good job in the current global context, and I don't expect any real adverse impact of this tariffs to be imposed on India or Indian companies. As I said, we are very early days. It's only been 15 days since the time he has become a president. We should watch for another 20-25 days. But I would say it will not be a bad outcome from an Indian perspective.
Madhu, Alex joining in. You've always been a very close watcher of the PSU story, and you've been very confident of that growth story for quite a while. A lot of these stocks, I think to a certain extent, one can call them a knee-jerk reaction. They got beaten down a little bit because of that capex number. Were you disappointed, or would you say that it's like the finance minister is saying, it's a very strong number? We're talking about 11.2 lakh crore that's going to be spent.
So Alex, actually the capex number is not disappointing. If you look at, you have to look at the overall capex and not only capex by the central government, because in the budget there is a lot of aid which is being given to state governments in terms of and that money further gets invested into capex only. So if I include that, then the overall money is 15 lakh crores, which is roughly 15-16% higher than the last year number, and this is the big distinction. And if I include the capex being done by public sector enterprises, then that number goes to above 19 lakh crore rupees versus 17 lakh crores which was there last year. So on the whole, even though headline number looks 10%, but actually the number is more like 15-16%. Because capex, whoever does, whether central government gives grant to state government and they do the capex, or central government directly does the capex, it is one is the same thing from a country perspective, and rightly so, because of this enthusiasm that they managed to have very good capex growth. They managed to give 1 lakh crore rupees in the hands of consumer, and that is unlevered. It is like equity. And on top of that, managed to have a 4.4% fiscal deficit. So on all front, this looks like a very good balancing in the budget. And if this gets achieved, I think 12 months later, we'll be very, very happy as a nation.
Up to that, then, if you're looking at your own portfolio and you're looking at stocks that you have bought and held in this pack that would benefit from this capex story, and you see downtick in a few of them, are you reinforcing your positions, and how are you picking your stocks in this space?
So this year is going to be, I would expect the broad indices to be in the range bound manner, and we must not extrapolate the returns which we have made in the last 3-4 years, because last 3-4 years it has been an absolutely roaring bull market in equities in India, right? I would say it's a range bound market. It's going to be a bottom up stock pickers market, and because of the noise and volatility, if your work is ready, then you will get a lot of opportunities to pick stocks. So that's what I will be focused on this year. Wherever possible, if I have stocks which are very high value in terms of valuation and which have run very hard, so those are the companies which I would look to sell or trim and get into something which are get into things which are really value based, and there is still a lot of leg room to go. And mind you, again, the thing which I am mentioning, because of the market volatility, you will get excellent entry points on a stock specific basis in this year.
Kela, good morning. Neeraj here joining in as well. Would love to understand your thoughts on the basis.
Neeraj, good morning.
Very good morning, sir. Would love to understand your thoughts on the basis of some of the comments that have come in into the global brokerage notes. Now, all of them, almost without exception, are pro large caps and not positive mid caps and small caps. They are making that bifurcation. I know you don't necessarily make that bifurcation, but I would love to know, would your portfolio now on also have a larger tilt towards the larger market caps as opposed to the smaller market caps?
Neeraj, it's a very good question. I have been always an investor who has always looked at risk reward rather than bifurcating the market in large cap, mid cap and small caps. I would say, having said this, there is definitely more value into large cap companies, given that last 2-3 years they have not performed. A lot of large private sector banks have done nothing. A lot of large cap companies have not given returns. And on the basis of our internal work, we are trading at roughly 18 times next year PE multiple for Nifty as a whole, which is definitely a discount to the long-term last 10-year average. So there is clearly more value in large caps. Having said that, I would not like to say that I would not invest into small or mid-cap companies. There will be interesting bottom-up opportunities, and we will look at them. But the tilt clearly is more towards large cap for this year.
The other question, Mr. Kela, is this unbiased or almost a universal tilt, if you will, or common tilt towards consumption stocks, staple stocks. Now, you, of course, amongst other things that you may have done, you've taken a large stake in a snacking company as well. I would just love to know if you, in your wisdom, believe that there is merit in buying some of the staples and FMCG names as well. And the reason why I find it intriguing is that while the budget allocates or gives, as you said, unlevered equity in the hands of the consumer, and HUL or some of the other stocks trade at 45-50 times for 5-6% growth, right? Even with this kind of money coming in. Is it, and the terminal growth isn't very different. Would you believe that large cap FMCG would find favor, or would it again be very bottom up and stock specific in the consumption space as well?
I would say, Neeraj, it will be bottom up. Let's not forget one thing. that the reason why some of these larger companies are having a lower growth is also from the fact that there are a lot of regional brands which are emerging, which may not be listed. Some of the companies on a regional basis are taking away market share. If you go to any wholesale, you go to V-Mart or you go to any of the stores at D-Mart, you will see that even though the overall consumption is not as bad as it is reflected in the growth of some of these larger FMCG companies, because there is market share being taken away marginally so by some of these regional brands and smaller companies. Because see, equity markets have been very lenient and a lot of these regional companies have been able to raise equity via SME, via doing IPO, doing private equity. So that is also kind of taking away marginal market share away from a lot of these larger companies. So I would not say randomly I'll just go and buy consumption stocks. It will be a bottom-up stock picking, and I would emphasize more on the growth and the valuation which we are paying. Last 2 days, obviously, a lot of portfolio managers who are very heavily tilted towards the capex may have had to shift in consumption. But I would be, while I am saying this is a very, very good move by the government, the 12 lakh rupees no tax was not anticipated by the market, and it will definitely boost the overall consumption in India. But for me, from a market perspective, it will be bottom-up stock picking. By the way, even in this sector.
Some of the private companies who raise money via private equity also benefit from the likes of MK Ventures and Madhusudan Kela, who invest in these as well. But Mr. Kela, one of the large themes that you had recommended or suggested on one of our shows, rather not a show really, events, was alcohol beverages, right? That falls squarely within the consumption bucket, not necessarily just a very large cap presence, strong growth. Does the budget give more fillip to that theme? Are you even more bullish now on liquor companies?
Now, I am positive, Neeraj. I think budget does give some kind of a fillip, but our conviction on liquor is really medium to long term. We believe that state governments are going to be more progressive, more open, as we have seen in UP, and also what we are seeing in Andhra Pradesh. Very early days, so the organized players will get more and more market share. So I remain quite positive on the liquor space, but my view is medium to long term.
So, if I had to understand this, and I think what people would be curious to know, Mr. Kela, is how do you think people will spend this extra disposable income now that taxes are lower? Are they going to buy alco-bevs? Are they going to go in for staples? Is there going to be some saving? Is there going to be discretionary spends? Because that's the biggest question right now, right? Where do you follow that money? What would be your take on that?
Or also, Tamanna, it could also be in buying houses for the middle class and spending part of this money into EMIs. Because let's say one middle class person who was earning money may have the saving of around 1 lakh rupee, rough number. So in a family of two, you have 2 lakh rupees of incremental earning in a year, which is roughly 15,000-17,000 rupees per month. So your first need is, apart from regular consumption, your first need also be to buy a house for yourself, and that gives, and which is why I say it is unlevered equity, because that regular income gives me also the flexibility to do selective buying of the capex item, which I was not able to do before the budget. So I think this will be a combination of consumption as well as some place like housing in the long run.
Very interesting take, and if people do that, then you're actually saying very positive contribution to the economy in terms of building scale. Just moving away from consumption for a bit and back to markets right now.
Tamanna, sorry to intervene.
No, please.
Sorry to intervene. The estimate of the budget itself, what I have read through, is a GDP growth rate of between 0.5 to even bullish people are saying 1.5%. And I believe that it will surely boost the overall economic growth. Given what the government has done and what people, in my opinion, are missing out. Or for the moment, yes, these broad numbers indicate a lot. But if you go into the detail, what they've done for National Manufacturing Mission, what they've done for SME credit, SME and MSME credit, what they've done to select sectors like leather, toys. So there is solar manufacturing. There is lot of details, and the government intent clearly is on ease of doing business. They decriminalized 180 laws in last year budget. They decriminalized another 100 laws in this year budget. So clearly the focus is on growth, and apart from broad number which everyone is talking about, what gives me personally the confidence is the fine print and detailing which is done on lot of sectors, which will aid to growth.
So then I would ask you, because in your view, capex is good. The tax cuts are revolutionary. They're really going to, add to the GDP. Why do you think that markets reacted the way they did on Saturday to the budget?
Because see, markets are clearly, there is overvaluation and there is a selling by foreigners. You can't do away with that, every day they've been selling. And that has nothing got to do with India per se. It is the dollar strength, it is money going into US market, or because of dollar strength, rupee being weaker. And foreigners are selling relentlessly every day. So markets is reflecting that. It's nothing to do with the budget.
Mr. Kela, I want to talk about PSU banks, and because we've laid the context, I think, for this question based on what you've said already, right? If you look at the earnings picture for the third quarter, by and large, you're seeing that asset quality for a lot of these banks has improved very dramatically. And if these banks, which have been the backbone of providing funds for capital expenditure and for corporate lending, if they get that fillip heading into next year and that asset quality is improving, they don't have too much exposure to the unsecured credit, are these the banks to bet on, and is the valuation picture comfortable for you?
So I would say that, when we made a call 3 years back on PSU stocks or PSU banks, and that was a very bullish call, and actually I went all out, and we were absolutely the minor voice at that point of time. So at that point of time, the valuation was very attractive and the ownership was not there, and also the kind of trajectory of growth which one could see at that point was not discounted by the markets. So some of these banks still offer good investing opportunity, but your return should be moderate. See, the most important point I'm saying that, right now you're given what is happening globally, and given what has happened to select portfolio and market as a whole in the last 3-4 years, whatever you are investing, you should not extrapolate what has happened in the last 3-4 years, and your return expectation should be moderate. So if you are, let's say, looking at 12 to 15% return over the next 12 months, some of these banks will offer that kind of returns.
Before we thank you, big calls during March, April 2020 of budget or of lows being made worked out beautifully. Big call on PSU banks, as you just said when you made it, worked out beautifully. Big call on alcohol companies, a small subset, worked out beautifully. Post-budget, around the Trump era, what is Madhusudan Kela's big call for the next 12 to 24 months? It could be a sector, it could be a stock, it could be market wisdom, whatever it is.
It is market wisdom, Neeraj. It is not sector or stock. I would say, preserve the money what is being made. Don't credit your own self that you are the like a star who made the money. It is the overall market boom which happened in the last 3 years that has made the money. So preserve the money. Be very choosy, very selective. This is a bottom-up stock pickings market. And if you keep your homework ready, then market volatility will provide excellent entry points to invest into. But you have to be you have to put in more amount of work and have your expectation moderate.
सर सारे बजट का और लास्ट 48 आवर्स का सारांश आपने एक आंसर में दे दिया. So thank you so much for that. Really appreciate from all three of us in the studio and all the viewers. Really appreciate your time.
Thank you so much, Neeraj. Thank you. Thank you.